comparing two of the most popular index funds in the stock market, which is the S&P 500 and the NASDAQ. So we're going to be looking at what the difference is between them, what kind of returns can you get with them, and then what stocks are in each index. So here we have the NASDAQ, which trades under the ticker QQQ. If you look up the actual word NASDAQ, we're not talking about the actual company, the NASDAQ, because that's different. So if you look that up, you see NDAQ is something different. We're talking about the QQQ index fund. And then for the S&P, there's different things you can invest in, but SPY is a popular one as well as VOO, which is the Vanguard ETF. So let's look at, first of all, what kind of returns are these indexes doing? Well, in the last 5 years, we have the S&P doing about 88%, compared to the NASDAQ in the last 5 years has done 161. So nearly twice as good of a performance. The NASDAQ is outperforming. If we look at the last 23, 24 years, because both of these came out in early 2000, which was pretty much right around the peak before the tech bubble burst in 2001, 2002. So you can see the S&P is up 250% since then, and the NASDAQ is up 376%. So again, the NASDAQ is significantly outperforming the QQQ. Now let's go over to the two different index funds and see which stocks are in them. So we have the NASDAQ. The NASDAQ is typically, recognized as the one that has more technology stocks in there, and that's why we're going to see now the S&P is going to have similar holdings, right? Because look, we have Apple, Microsoft, Amazon, Nvidia. You got other things like Tesla and Google in there. And if we go to the S&P, it's also going to have similar companies: Microsoft, Apple, Amazon. But the difference is that the NASDAQ is going to put a little bit heavier weight to a couple of these. So we can see Apple is 8.9%, Microsoft is 8.6%, whereas in the S&P, it's only 6.9 and 6.7. Now, I still kind of prefer, although I invest in both of these, I prefer the NASDAQ, probably just because even though it puts those technology stocks with a heavier weighting, I think that actually is a benefit most of the time, unless those technology stocks have, years, a bunch of years where they underperform, which I think is not likely in the next decade, let's say. That's why I prefer the NASDAQ over the S&P. But really, if you wanted to be as safe as possible, diversified as much as possible, you probably go with the S&P 500, because the S&P 500 is going to have 500 different companies. Now, the NASDAQ is also not just tech, because as you can see, there's other companies like Intel, Costco, Pepsi. So well, actually, Intel's a bad example, but Costco, Pepsi, you could say T-Mobile maybe. Well, T-Mobile is the point is there's more Starbucks, there's different industries besides just technology. And then the S&P is pretty much the same thing. You got, Bank of America, Pepsi, Walmart, all that stuff. So that's why I prefer the NASDAQ, although both of them are probably good investments, and it might even be a good idea to invest in both of them. But if you're looking for the safer, more diversified route, you probably would go with the S&P 500. So thank you for watching, and I will see you in the next video.